Good morning, everyone. Thank you for joining us for our live webinar on insurance for small business. It's part of our Money Smart for Small Business course, and today we're going to talk about insurance and the considerations for small business. Before we get started, I'm going to take a couple minutes. I'm going to run through some tips that will make our session this morning run smoothly for you and help you get the most out of your time with us. I am Jean Smith. I am the training coordinator here at the University of Houston-Victoria Small Business Development Center. And so as others are joining the webinar, I'll run through these things. Go ahead and put in the question box your first name, where you're joining us from, and the kind of business that you have. That helps Ty and I understand and make sure we do provide information that helps your small business. We are recording today's webinar, so you will receive a link to the recording as well as a copy of the slides so that your webinar view doesn't lag. Right now we do have the mics muted and your webcam should be off. The University of Houston-Victoria SBDC is a business advising and training center, and we serve 11 counties in South Texas. These are the counties that you see right here. And in addition, we are part of a greater network that stretches from Brownsville all the way to El Paso and over to Austin, back down here to Victoria. And within that network, there are 10 other SBDC centers like ours, and we all provide assistance. And you can see here some of the things that we do. We help with business starts, expansions, if you need to write a business plan or get loan ready, lots of things. If you're in a small business, we can help you with whatever it is that faces you. In addition, because you're within our network, our clients get access to specialty resources. Those are located at UTSA at the Institute for Economic Development, and that covers things like human resources issues, market research, industry data, technology commercialization. And in addition, all of our centers offer training, whether it's in person or webinars like today. There are over 1,000 SBDCs across this country, so you are never far from SBDC assistance. And if you're not in our service area or you're not within our network, you still can get assistance from an SBDC. Just go to www.americassbdc.org. The first thing you will see on the page is a place to put in your zip code, and it will tell you the closest SBDC to provide you service. We are funded in part through a cooperative agreement with the Small Business Administration as well as the state of Texas. Advising services are provided at no cost. They are confidential and they are client driven. If you are not taking advantage of these services, we suggest you sign up today. And I will note that we are available throughout the life of your business. So there's no limit to the number of times you can meet with an advisor or utilize our services. I did put some information in the chat on how to take advantage of our services, how to find us. I will note our business advisors do not provide legal or tax advice, and we are not the SBA. In addition, as I said, we provided a variety of training programs that are at little to no cost. For attending today, you will get a link to our newsletter and you can subscribe to that. We like to keep you up to date with what training's coming up and small business news. We utilize the GoToWebinar platform. Here at the top above where you see Ty and my webcams, you see it says screenshot with the camera icon. That enables you to take a picture of whatever's on the screen. So you just come here and you click on screenshot. It saves the image to your desktop with a generic file name. So I do suggest at the end of the presentation, if you've saved any of those screenshots, go back and rename them so you understand what exactly is on that image. In addition, this is your control panel. It's at the top right of your screen. If you want this to stay in view, it doesn't stop you from seeing the presentation. Just go under view and unselect the auto hide. It's a default setting. It's not our choice, but just unselect it, and then you will see this. There is a handout today, so if you open up the handout box, you can drop and drag the flyer that we have located in there. Sorry about that. In addition, this is your question box where we ask that you just put your name in, your business, and where you're joining us from. And during the webinar, I'm in the background and I do monitor the question box so that if there are questions for Ty, I can get those out to him and get those questions answered. I will say, if you need assistance, the easiest thing to start with as far as troubleshooting is to log out and log back in. If that doesn't solve your problem, then we have included the number for customer support for GoToWebinar. So let me tell you a little bit about our presenter today. Ty Zeller is a Certified Business Advisor 3 with UHV, Small Business Development Center. He's been with us since August of 2020. He covers Victoria, Jackson, Calhoun, and Aransas counties, and he also assists our advisors and some of their clients when they have issues that Ty is well versed in assisting with. He has practiced law for over 25 years in the Victoria area, and Ty is experienced in areas of local government, banking, real estate, nonprofits, and small business. In addition, he has served as the Port Lavaca City Attorney, as well as the Port Lavaca Municipal Court Judge. He holds his bachelor's and master's degree from UHV, and he also holds a law degree from the South Texas College of Law. And if you'll give me a moment, I will turn this over to Ty, and we will get into insurance for small business. Okay, Ty.
Okay, you can see my screen?
I'm not seeing your screen again.
All right. How about now?
Yes, I do. That's perfect.
Okay, insurance for small business. We are going to be viewing our Money Smart curriculum, like Jean said, and that is put together by the Small Business Administration. And the presentation itself, the slides that we'll be looking at are multi-state. So they apply across the country. I will try to key you in specifics with regard to Texas where I can. I am a Texas licensed attorney, but I'm not your attorney. In other words, I'm not giving you legal advice. We can't give legal advice here at the center. Hopefully I'll be giving you enough information to allow you to know enough to ask your own attorney questions, to ask your insurance agent questions, and you'll be informed as to exactly what questions to ask. So we're going to go through a number of things. Jean went over the ground rules and the introductions. The objectives are, and what we're going to cover is the different types of insurance that are required for small business. We're going to look at other types of insurance that small businesses should consider, but maybe aren't required. And we're going to explain why insurance is important for small business. So what do you want to learn, and what do you know about small business? In your participants guide that I think that you got on page 5, there's a pretest. If you would look at that on page 5, it has a number of questions. These questions go down through a number of the subjects we're going to be talking about in the next few minutes. Number 1, why is it important to have insurance? It says check all that apply. A, helps to manage risk involved in running a business. B, some insurance is required by law. C, it can protect businesses from loss of income. D, it's a tool for planning to reach new markets. So at the end, when we go through, you'll know the answer to that question. Number 2, liability laws, blank. For this reason, it is important to blank. You'll need to look through that, and at the end of our presentation, we'll be able to answer that. Number 3, traditional homeowners insurance may not cover damage caused by a home-based business. True or false? Number 4, when selecting insurance, which of the following questions is important to consider? Then it has the consideration. So all of this pretest, if you want to go through these and kind of check them off, then at the end, you can see the ones you got right, the ones you got wrong, how good your familiarity is with insurance. The first thing that I would like to cover is what is insurance? What's the definition of insurance? It is a contract between you and an insurance company whereby you pay a premium and an insurance company takes on some of the risk that your business faces. And that risk, we're going to be talking about some of those risks, but it's a contract. So keep that in mind. There are 6 key areas that we're going to talk about. Insurance your business may require. In other words, there are a number of businesses that have a requirement of a particular kind of insurance. There are other types of insurance that you need to consider even though it's not required. And then reasons for insurance. There are location-related considerations for your business, which may require additional insurance or additional riders. We'll talk about that. We'll talk about selecting a policy, agency, and an agent. And a very important thing is what to do after you purchase the insurance. Okay, some of the things that your business may require, some kinds of insurance. Of course, the SBA is recommending that you check with your federal, state, and local governments to determine if you are required to have certain kinds of insurance. On this SBA slide, it talks about medical insurance that may be required for employees. In Texas, there's no requirement to have medical insurance for your employees, except for the situation where your small business has medical insurance that includes your family. You can include your family on your small business insurance if you have at least one non-family member employed at least 30 hours a week, and you pay at least half of their insurance premium. Then your family would qualify to be on that group insurance policy. But other than that, there's no requirement in Texas to have your employees covered by medical insurance. Of course, automobile insurance coverage for vehicles used in connection with a business. Of course, you have to have automobile insurance for your own private use, for sure. But if you're going to use your automobile for business purposes, you would need to have insurance for that. Other types of liability insurance, depending on the kind of always check with, I always go back to always check with your federal, state, or local businesses. Examples of specific insurance that are required by certain licenses. If you're a lawyer, doctor, architect, any profession that gives advice, CPA, something like that, architect, they require specific kinds of insurance. They will, and a lot of times that's required by law. Doctors, people like that. Now in Texas, even lawyers are not required to have professional liability insurance, interestingly. If that lawyer represents a bank, though, or a title company, that specific client may require that lawyer to have professional liability insurance. It is different than general liability insurance. Let's just say you're a CPA and you advise tax clients. The tax client comes into your office and you give them advice. If you give them bad advice and you cause damage to your client, your professional liability insurance will cover that and take care of that. However, if your client comes in and trips on an extension cord that is in the walkway of your office and falls down and hurts themselves, your professional liability insurance is not going to cover that. Your general liability insurance will cover that. So it's important that you have both of those. And I'm going to continue to, throughout the next few minutes, remind you to consult with a commercial business insurance broker. Those brokers will be able to help you and give you, a lot of times they'll have a package. If you tell them what kind of business you're in, they have a package of insurance that fits that kind of business. Also, besides general liability, professional liability, you may want to think about director and officer insurance. A lot of our clients in our office form an LLC or a corporation to protect them from liability as owners. That's a good strategy and it works. However, you could still be sued as a director or an officer of your small business. So it's best to have officer and director liability insurance. It is really remarkably inexpensive for that kind of coverage. So just keep in mind, you could be sued as an officer or director rather than an owner. SBA is reminding you that liability laws do change. So be aware of that and continuously talk with your insurance broker about any changes that may occur. Some examples of specific businesses that you may want to talk with your broker about that may require specific kinds of insurance are restaurants, food service, food truck, things like that, catering. Those kind of businesses really require a kind of a specialty type of insurance that your insurance broker could hook you up with. Construction companies, they have their own issues that need to be covered under special insurance. Auto repair shop, I mean, you could put under there, yeah, computer repair, just about any kind of business like that has specific needs that need to be addressed by their specific policy. Can you think of any other businesses that would require specific kind of insurance? Well, we mentioned doctors, CPAs, no doubt about that, okay? Lawyers, it would help if lawyers did have professional liability insurance. In my career as an attorney, a couple of times people would come in and want to hire me for a specific task, and they only a couple of times have they asked me if I have professional liability insurance. I think people assume that lawyers do, but in Texas, it's not required. You may inquire about that. Engineers and draftsmen, lenders, underwriters of loans, they have professional liability insurance. Freight carriers, somebody you would hire to haul equipment, or your movers that move your office, they would all have specific kind of insurance that would be specific to their business. Another, in many states, workers' compensation insurance is required. In Texas, it's not required, okay? Workers' compensation insurance protects against illnesses that your employees get from work, injuries at work. Workers' compensation insurance pays for rehabilitation, treatment of conditions, maybe retraining for another job. It addresses payments to beneficiaries. It pays some lost wages. It's required by most states, but not in Texas. It is, you can get it through a private insurance carrier, or your state can actually sell you workers' compensation insurance. A couple of times since I've been here at the SBDC, I've had clients that have told me that they don't need workers' compensation insurance because their employees are covered by health insurance. Don't fall into that trap, okay? No doubt, if your employees have health insurance and they are injured, they could probably go to their doctor and present their insurance card. They would be seen by their doctor and issued medication, get x-rays, whatever that injury required. But when the insurance company got that claim, they would see that it's an injury. The first thing they're going to do is call the injured worker, and they're going to ask that worker, their insured, how they got injured. And if they say that they were injured at your job, the insurance company is going to send you the bill, and you're going to be responsible for 100% of that. And if you don't pay it, the insurance company will sue you for it. So don't fall into the trap thinking you don't need workers' compensation insurance just because your workers are covered by health insurance. Another way that businesses try to get around workers' compensation is to say that they're 1099 employees. The term 1099 employee is a contradiction. Either you're a 1099 contractor or you're an employee, one or the other. And there is a good bit of gray area in the middle. But when somebody is injured on the job, you don't want to get into an argument about whether that person is an employee or not. It doesn't matter if you call them a 1099 contractor. It's going to go by a 9-point test to determine whether they're your employee or not. And if they are your employee, you either better have workers' compensation insurance or be ready to cover their treatment. Okay, well, that's workers' comp. Another one that is required is unemployment insurance. That is required under federal law and state law. Both the federal government and the state government take insurance premiums for unemployment. If the employee loses their job at no fault of their own, in other words, it's basically a layoff, they have to be willing and able to work and actively searching for work. The unemployment system is federally regulated and state administered. Check with your state and your federal Department of Labor on the requirements for that. Always make your payments. If you don't pay the unemployment insurance to both your state and your federal government, you could be held personally liable, okay? It goes beyond just the business. The person responsible for paying those payments could be personally liable, and it could be a misdemeanor or a felony, depending on the circumstances of the non-payment. I was unaware of the federal unemployment insurance requirement as a new lawyer opening my office. I knew about the state requirement, and I knew I was paying unemployment insurance premiums. And then I had a investigator from the U.S. Treasury come into my office and show me a badge and tell me I wasn't paying the federal unemployment premium. I looked at my secretary and she looked dumbfounded. She didn't know anything about it. Anyway, I owed, it was less than $100. It's not very much, but that particular investigator had dozens and dozens of people in Port Lavaca he was going around and visiting with and informing about the requirement of federal insurance and taking collecting the past due premiums. So to me, it's kind of humorous now, but it's not humorous when somebody from the federal government comes in and shows you a badge. So be aware of that. Other types of insurance to consider for your business: property insurance. Your property insurance can repair or repair your building or replace your building and its contents, equipment and inventory in the event of a fire or storm or other types of occurrences listed in the policy. The definition of property can be broad, and it can include business interruption insurance, which we found out was very important in the Texas ice storm a couple of years ago, where we were without electricity. A lot of places were without water for several days. Business interruption insurance may be something to be sure that you have that. The commercial insurance can insure against natural disaster, theft as well, theft by your employees or theft from the outside. Equipment, it can insure equipment, give you coverage in a commercial policy, can repair your equipment, replacement for parts. It can cover your inventory, your supplier shipments, and your stock. Even if you rent or lease a building, you may obtain insurance on the contents of that building. And it's based on the average inventory in your warehouse on a monthly basis. Depending on the policy, this insurance covers goods you own and in your possession that you have on consignment, and it may cover goods that are in transit. Okay, that's going to depend on your contract with the transit company. And it's going to depend on who's responsible for damage while it's in transit. Confirm with your insurance vendors on the coverage in place for stock ordered but not delivered. Now, there are a couple of kinds of property insurance. There's an insurance it's called all risk. An all risk policy basically covers everything that could happen to your property, except for those items that are listed. And those items that are listed are exceptions to the policy. So an all risk policy covers everything except for what's listed. Then there are specific peril policies that are policies that only cover what is listed. Some examples of all peril, specific peril policies are flood, earthquake, business interruption insurance. All risk policies generally cover risks faced by the average small business, while peril-specific policies are usually purchased where there's a high risk of peril in a certain area. Here on the Gulf Coast, specific peril policies, you may want to include a rider for like hurricane. Okay. Certain risks may require additional costs to upgrade a policy, such as the risk for heavy snowfalls, which may not be covered in a basic policy. Flood and earthquake insurance should be considered even when it's not required, especially in those areas that are prone to those type disasters. Okay, discussion number two. Review examples of required business insurance. Okay, is your business required by law to carry any of these types of insurance? Think about it. Is your business required to carry liability insurance? It may be. Is your business required to carry workers' compensation? If you're in Texas, it's probably not required. It's highly recommended. There is a procedure where small businesses can be officially self-insured through the state. You have to meet certain requirements and you have to register as a self-insured business through the state. That is an option, but you just can't say I'm self-insured without registering. I mean, if you don't do anything, basically, really, you are self-insured, you just don't realize it. Unemployment insurance is definitely a requirement. Disability insurance, we're going to talk about that in a minute. That may or may not be required depending on maybe a lender. And number two, if a specific type of insurance is not required, should you carry it anyway? And why is that? So just some things to think about in your own situation. All right, so there are, beside government regulations about what's required, you could have other requirements, like from a lender or investor required insurance. When financing, a lender or investor may require you to show insurance protecting the business assets, like the building or the property. If a bank is lending you money on your building, or if they're lending you money to build a building, or they're going to be covering your real estate, your property. They may require you to have not only liability insurance, but insurance that covers those assets. And they may require that the bank, be listed as a beneficiary, or they may want to be the owner of that liability policy. They may want you to have insurance to insure your cash flow, to have a provision for or insurance for interruption of business. Because kind of if the bank is insuring anything in your business, they kind of become a silent partner. And if your business is at risk in a certain area, like interruption of business, the bank is at risk too. So they want to be covered. They may require you to have disability or life insurance. If you are in a business, like a HVAC business, and you are the main HVAC or maybe the only HVAC technician, the bank may want you, and the bank is lending you a good bit of money on your business, the bank may want you to have disability insurance or life insurance. The SBA is calling that death insurance, but that's life insurance. To protect the bank, because if something happens to you, if you're disabled or you pass away, your business is stopped, okay? So the bank is going to want to make sure that those payments are continually being made. And we're going to talk about that a little bit more in a minute. Okay, activity number 3. Think about these discussion points. And with regard to ensuring your life, and your ability to continue your business. Number 1, do you have a list of the names of people who could run your business that you could trust to do so? Now it's important that you think about these and go through this mental gymnastics. If something happened to you, do you have a list of people that are going to step in and continue your business? Not only are they going to continue your business, are they going to have the legal authority to continue your business? Are they going to be able to access your bank accounts, your various accounts? Are they going to be able to use your credit card? You need to think about those things. Do you have a plan for your business in the event of your death? Is there any member of your family who's named to liquidate the assets? So you may have family. Your family may want to step in, but the important thing is, do they have the legal authority to? A lot of our clients here at the SBDC form LLCs. They form corporations, and it's a very good and effective way to run your business. It's a good and effective way to shield yourself from liability, but you need an operating agreement if you're going to do that. A lot of our clients will go and form an LLC by themselves on their own, and you can do that on your own. But many of our clients that do form LLCs don't have an operating agreement. If you have an LLC and you're operating your business, you don't have an operating agreement, and you pass away, that operating agreement would normally be able to be the legal document that tells your spouse, your partner, a key employee, that tells them that they can come in and legally operate that business in that circumstance. If you don't have that operating agreement, basically you're going to have to go to court to get somebody to run your business for you. So the operating agreement acts like sort of a will for your LLC or your corporation. If you form an LLC with a friend or a spouse, and your friend passes away, all of a sudden you are now in business with your friend's spouse, who you may or may not get along with. If you and your spouse have an LLC together and you are divorced, that LLC is going to specify, that operating agreement is going to specify what happens in the event of divorce. So you can see how that is very important. So it's important to go through these mental gymnastics about who's going to step in, what about employees, what about employee ownership, what about selling to employees to provide income for your spouse in the event you pass away. So the bottom line is, do you have life insurance to cover all the liabilities of your business? Do you have life insurance that would step in and pay off all the liabilities that your business has in the event of your death? Another type of, well, it's not a type of insurance, but we're going to consider it as insurance. The SBA calls it insurance. It is a surety bond. A surety bond is a form of a guarantee, a contractual guarantee for a contract completion. A business, let's just say a business seeks a contractor to fulfill a certain contract. Let's just say the federal government is building a post office, and they're looking for a contractor to build the post office building. That contractor is going to need to have 3 surety bonds, okay? And those surety bonds ensure the completion of the contractor. Those surety bonds protect the owner, or in our example, the federal government. The 3 kinds of surety bonds that there are a bid bond, a payment bond, and a performance bond. Now, when the federal government goes out for bid, when they do a project, they have to, under the law, go out for bids. And there'll be various contractors that will bid on those projects, on that project. The payment bond, when they turn in their bid to the federal government, they have to submit with that bid a payment bond. That payment bond guarantees that business will step in, will complete that bond according to that bid. Okay, that business can fulfill what they say they are bidding on. They will also have a performance bond, which, well, actually, they're going to have a payment bond, which is going to guarantee that they paid all their contractors. So let's just say in the construction of the post office, the contractor who won the bid subcontracts the electrical work to an electrical company. Electrician comes in, does all the work, sends an invoice to the contractor. The contractor doesn't pay the electric company. The contractor gets paid from the federal government because the job is completed and the job's done right. But the electrician doesn't get paid. The electrician can put a lien. In Texas, we call it a lien. Most states, it's called a lien. We'll put a lien on the property. Well, the federal government's not going to like that. So they're going to take their performance bond that they got from the contractor and make a claim on that performance bond. The bonding company will come in and pay the contractor that didn't get paid, okay, so that the lien would be removed. Also, there's a performance bond, which assures that the contractor will complete the job according to the contract terms. It happens more than you would think. A contractor gets into a job and then they go bankrupt or out of business, or they just don't come back to the job. The job's halfway completed. The owner, or in this situation, the federal government, is not going to like that. They have a half completed job. What are they going to do? So in that situation, the federal government would make a claim on the performance bond. The bonding company would come in, hire another contractor to complete the job. So those are the three types of surety bonds that you can get. There are surety bonds are required in a number of situations, more so than just in the government contracting situation. Private businesses can require their contractors to have bonds as well. So you may run into that in more than one situation. Why is it important to have insurance? Think about this. You are paying a company to take some of the risk of your business. Going into business has a lot of risk. And to get an independent insurance company to take some of those risks, you pay a premium. Now, the insurance company is going to want you to keep some of that risk, and that's generally called a deductible, the risk that you keep. But another reason to have insurance is to protect your assets, cash or property, protects you from loss of income or loss of business, maintains your continued financing. You may have to have insurance to get financing, protection from injuries and damages received or inflicted. Liability and mandatory requirements. The government may require you to have it. Your clients may require you to have it. Your employees may not want to work for you unless you provide them medical insurance. So that's important. Business continuity, recovery from disasters, protections from errors that you make. I mean, yes, you want to be protected from liability in the event you make an error, but also you want your client to be made whole. I mean, if you've done something to your client that's caused them damage, you want them to be made whole. So that's another reason to have insurance. There are location-related reasons, considerations. Home-based businesses. A lot of our clients here at the SBDC have home-based businesses, or they operate out of their home, or their office is in their home. Your normal homeowner's insurance is not going to cover business-related damage or injuries. If you have customers that come to your home that fall down on your front steps, if it's business-related, your homeowner's insurance may well and probably won't cover that. You would need one of two things. You would need a rider on your homeowner's insurance that covers your business activities, or you would need a whole new and different business policy. So your commercial business broker could take care of that for you. You need to talk to them about that. There is a thing called retail insurance. In the event you have more than one location, that you have inventory, it would cover you for theft or credit card theft. Your retail insurance would cover if you use your personal vehicle for your business. I mean, that's another thing, that your personal auto insurance may well not cover damages like from an accident if you're on a business call. So beware of that. A commercial insurance policy has greater coverage than retail. And it's generally for larger businesses and more comprehensive. If your business provides services like at a kiosk, a festival, a flea market, a conference, if it's a one-time deal, you can buy insurance that covers just that event. If you take your goods to a flea market and you do it, 2 weeks out of the year, and it's a one-time deal, you can buy insurance just for that event. It'd be a good bit cheaper than buying for a whole year. So you can talk to your insurance agent about that. Okay, so selecting a company, selecting a policy is it's a weighing deal. Okay, first of all, do you need the insurance? Some of our clients here at the SBDC are involved in e-commerce. They buy clothing items from China. They display them on a website and they sell them. There's not a lot of liability involved in that. There'd be no reason why that company would need $10 million of liability insurance. It is difficult to even conceive of how that business could cause liability or injury to somebody. So you need to consider what your business does, who it's involved with, when you select your policy. Also, look at the premium. Does the premium that you would have to pay make sense for the insurance that's required and the insurance that's being provided? Consider the deductible. The deductible is the amount that you have to pay on any claim before the insurance company pays anything. So it's the amount of risk that you have agreed to retain for your business. Is the deductible so high that paying the premium would be ridiculous? Or is the deductible so low that it would make your premium so high? Those are the kind of considerations that you need to think about. Is the coverage sufficient? Is it going to cover everything that you're going to need? Are there time constraints on modifying coverage? So, in other words, does your policy, if you decide to expand your business, or if you decide to open a new location, are you supposed to give your insurance company 30 days notice before that coverage would extend? Those are the kind of things that you need to think about. I mean, it would be a sad situation if you opened a new location and found out you're not going to have coverage for 30 days. So again, talking with your agent. Selecting a company or an agent. I mean, it's the same with buying anything. Look at reviews. Online is the best way to do it. You can compare quotes, call a number of brokers, companies, get quotes, talk to them about what your business does, what kind of coverage they would recommend. Does it make sense? The kind of deductibles they offer in relationship to the premiums that they would charge. Is the company stable and accessible? Have you ever heard of them before? Ask some of your your friends, neighbors, family, about commercial policies that they've bought. Are they satisfied? Do they like their agent? Just like buying anything, that's how you select a company or an agent. All right, what to do after you make the purchase? Keep your policies easily accessible, okay? I highly recommend that you keep your insurance policies in the cloud as well as on paper. Keeping them in the cloud, I like doing that. I mean, you can look at them from anywhere that you are in the world. You can just pull them down, pull them up, read them. But if we're in the situation of having an ice storm where the electricity is out, hurricane, any kind of natural disaster, you may not have access to those electronic copies. You may not have access to a thumb drive. You may need to access paper copies. So I recommend you have paper copies as well as keeping it in the cloud, as well as keeping them on a thumb drive, easily accessible, all those. Keep your emergency numbers available. Keep them on your phone, keep them written down. In the event of a natural disaster and you need to contact that insurance now because you need money within the next day or so to get started back, you need to know who to call. Okay, you need to have that number right there. Review your policies periodically and meet with your agent from time to time. Really good advice. So, what do you do after the purchase? So, a lot of times, a requirement of getting a loan from a bank, namely SBA loan, you're going to need to have insurance that maybe covers you, maybe covers your life, maybe covers your disability. It may cover your property, your building. But in the event that it covers your property, the bank has lent you money to build the building, you pay it off early. Let's just say it's a 10-year note, you pay it off in 5 years. That's great. But in year 6, your building burns down. Well, no problem, because you've got insurance. You make a claim, the adjuster comes out, he declares it a total loss. They're going to write you a check for the total amount of the insurance policy. The check comes in the mail in 3 days. What could be more perfect? The problem is that check's going to be written out to the bank, because when you got your loan, you made the bank the beneficiary because of the loan. Now the bank can't keep the money because the bank isn't owed the money anymore. So it's not really the bank's money, but you're going to have to get the bank to sign off on that check. Now, if it has been a long time since you paid off that loan and maybe the bankers have changed, maybe the bank has changed hands, the bank is going to may have to do some digging to find out whether they should be endorsing that check over to you or not. So the key here is, and the advice here is, when you pay off that loan, make sure that you get the bank not only to release the loan, but to release that insurance policy as well. So that's something to do after the purchase. Also, handle your credit responsibly. Your insurance premiums not only are based on your deductible and the amount of coverage, but it's also based on your credit worthiness. So handle your credit wisely. It's going to pay off all the way around. Get credit or a refund for cancellations. If you're halfway through your insurance coverage term and you change policies, you'll be getting a refund on your current policy. Now, if you're staying with the same company, make sure that refund is applied to your new policy, or that make sure you get that refund check. It easily can fall through the cracks, and that's just money lost. If you have a problem with your insurance company, you can file a complaint with your state insurance board. And in Texas, that's the Texas Department of Insurance. And that's easily accessible online for that number. Okay, assuming risk is part of doing business. Okay, the SBA is comparing it to going outside in the rain. You could protect yourself from the rain by not going outside, but you could put on your boots and your coat and you get your umbrella and go on outside. They're comparing that to going out and getting customers. If you stay inside, you're not going to get customers. So go out, but cover yourself with boots and coat and umbrella. Or in other words, cover yourself and cover your risk with insurance. Key points to remember: of course, check with your state, local, and federal government for insurance that's required. Pay your unemployment insurance. We recommend workers' compensation premiums. Pay those on time. Professional licensing that may be required for your particular business. Surety bonds, keep those in place. Notaries, if you're a notary, you're required to have a bond. Car dealers are required to have a bond. There are a number of professions and businesses that are required by the state to have a bond. Lenders and investors require insurance protection and bonds from risk involved with doing business. Some key points to remember: insurance minimizes the impact that risk will have to your continued operations, impacts your continued financing, helps retain employees, protects from liabilities. Evaluate your risk, ask questions, compare policies. Some people do a spreadsheet, a lot of OCD people, I can relate to that. Put a spreadsheet, you get your different quotes from different companies and you have your premium amount, your coverage amount, your deductible, and you put them all out on a spreadsheet and compare them. And then one of the categories needs to be reputation of the company. Is it a company I've even heard of? So you could do it that way, but that is a good thing to do, a good process to go through. Keep emergency contact information in an accessible place. Keep your beneficiaries updated on insurance policies, and obtain releases when your loans are paid off. Okay, so I hope all that has generated some questions on your part, and I'd like to hear probably what you've learned. I think that you probably have learned small business insurance requirements for professional licensing. You've learned about unemployment, uh, insurance for the protection of lenders, and other types of insurance to lessen the risk. So do we have any questions?
We do have a question. When you
Okay.
talked about insurances to consider for specific types of business, do you
Right.
have anything for someone that's operating a home care business?
Absolutely. There is probably a specific insurance policy that is a cross between a home-based business and a medical facility business. Um, a good uh, commercial insurance broker would be able to help you with that specific policy. I would recommend that you not just buy a generic uh, commercial liability policy. You're going to need one that specifically has to do with a home-based business and any kind of business where you put your hands on people or you put your hands on their money. You need specific kinds of insurance that your broker could help you with that.
Okay. Everybody does have the ability to unmute themselves. That means you just go to your control panel and click on the little round mic button that is red. That will change to green and unmute you, and you certainly can ask Ty any questions directly, or you can type them into the question box, because we are here to help you and help you understand insurance. When you have a small business, there is a lot of things to consider.
Let me just say right before we leave, we got a minute or so. There's a big difference between a bond and insurance, and the biggest benefit of having insurance is if there's a claim made against you or your business, part of that insurance policy is to provide you an attorney. The biggest expense of most claims against a business is hiring an attorney. And under a general commercial liability policy, that insurance company has to hire you an attorney. Under the surety bond situation, the bond does not hire an attorney for anybody. So that's the main difference between a bond and insurance. But keep in mind, having insurance, uh, that insurance company is going to hire you an attorney, which is a big benefit.
That's an excellent point. Um, I am not seeing any additional questions. I want to remind people when they leave us today, your browser will open to a 5-question survey. It takes less than a minute. It lets Ty and I know how we did, how the information is helping for our small business clients. So take a moment if you have it. We know everybody's very busy, but take a moment and complete that survey, because that does drive what our training program looks like. I put in the chat, but I'll just remind everyone that we'll be emailing a link to the recording as well as a copy of the slides. In addition, I'll have some contact information in there. So if you have questions that come up after today's webinar, you certainly can direct them to myself or to Ty, and we will try and assist you. But I'm not seeing any more questions, Ty.
Okay.
Thank you for being here, Ty. I really appreciate you giving of your time and your expertise. It really made today very interesting. And I want to thank everyone who took time out of their busy schedules on this gloomy Tuesday here in South Texas to join us. We appreciate you joining us, and we hope you will join us for the next webinar. And we will see you all. Bye-bye.